Welcome to another video lesson with Navigation Trading. In this video, I want to talk about 5 ways to reduce your risk trading options. At the end of the video, I'll show you how to start creating consistent monthly income and how you can get started for free. So when it comes to reducing risk, there are really 5 ways to get true diversification. Number 1 is diversify your symbols. So don't put all your eggs in one basket. Don't trade all in one symbol. Many people, including large institutional money managers, think that diversification is simply, let's say, putting 60% of the portfolio in stocks and 40% in bonds. The stocks might be made up of some large caps, small caps, some international, and the bond portion might be made up of some long duration, long maturity bonds, some short duration or government securities. And really, that's not true diversification. There is still a lot of risk. As we saw in 2008, when the market went down, everything went down. So when things get a little out of hand, a lot of times this diversification that you thought you had goes away. So diversifying the symbols that you trade is excellent, but there's a lot more to it. You have to remember to also diversify your asset classes. Think about this. Let's say you had on 5 different positions. One in SPY, which is the S&P 500. One in IWM, which is the Russell Small Caps. You had a position in Apple stock, and IBM stock, and Google stock, right? 5 different symbols. So you think, okay, I'm diversified. I'm in 5 different underlyings. Well, what do all these have in common? They're all stocks, right? So if the stock market moves down, most likely these are going to move down. If the market moves up, most likely these are going to move up. So you have to diversify in different asset classes. And what I mean by asset classes is you got to diversify into stocks. You got to utilize stocks. You got to utilize bonds. You've got to utilize gold and oil and natural gas and soybeans and all different types of asset classes that are completely uncorrelated to each other, that don't move together in tandem, and that'll help get you a more true diversification and help reduce your risk. Number 3, diversify your strategy. I always have some positions on that are undefined risk, like strangles, straddles, short puts, etc. And I also have some that are defined risk positions, like iron condors, butterflies. If implied volatility is low, we like to use calendar spreads or directional plays like put spreads, call spreads, where you can then you can buy and sell stocks and futures and have a little bit more of a directional assumption. But you've got to diversify your strategies. Don't just use one strategy. Number 4, diversify your time. Let's say, as an example, you want to put on 10 different positions or 10 different trades. Are you better putting them on all at one time, or to space them out and put one trade on each day for 10 different days? Obviously, it depends on what happens during that 10-day time period, but I would argue that spreading those out over time is going to dramatically reduce your risk. As time passes, the amount of premium in the options changes, implied volatility goes up and down. So if you diversify over time, that's going to help you cut down on your risk. And number 5, diversify your price. If you put on positions as price moves around, you're continuing to widen your profit range. If you put it all your positions on at one price, then you're living and dying by the range at that one specific price. You've got to wait for price to move around, add on additional positions. So let's say we were just trading in a specific symbol like SPY, and we wanted to put on 10 contracts. Well, I think you'd be better off, putting on a couple contracts today, wait for price to move, put on another couple contracts, and continually widening your profit range and adding positions at different price levels. So these are the 5 ways that you can really cut down on your risk. I hope this was helpful. If you'd like to learn more about the different strategies that we use to make consistent returns, come see us at NavigationTrading.com. We've got a ton of free resources, including the Navigation Watch List, which is a list of the most profitable symbols to trade for each type of strategy. We've got the volatility indicator, which you've seen on my charts. You can download this directly to your thinkorswim trading platform. And we've got a free options course called Trading Options for Income, which is a step-by-step guide to get you making consistent trades right away. We look forward to seeing you there.